This is Colin O'Keefe for LXBN TV. Tax reform is back on the national radar, with Michigan Congressman Dave Camp issuing a discussion draft of the Tax Reform Act of 2014 late last month. Joining me now to explain the basics of that draft from Portland is attorney Larry Brant. He is with Garvey Schubert Barer, and he is author of the blog Larry's Tax Law. Larry, first, what stands out to you as being most noteworthy in looking at the provisions of this draft that are aimed at individual taxpayers? What stands out to you there?
Well, Colin, I think there's a number of provisions that stand out. I don't think anyone would debate the premise that we need tax simplification. Our tax system is plagued with unnecessary complications that often make compliance very difficult and also very expensive. House Ways and Means Chairman Dave Camp issued a discussion draft of a tax reform bill last month, as you just mentioned. Hopefully, circulation of this bill will be the impetus to get lawmakers working on much-needed tax reform. His discussion draft contains several interesting provisions. As we look at the individual side of the coin, at least 7 provisions stand out. Number one, he proposes to consolidate the 7 tax brackets we currently have for individual taxpayers down into 3 brackets, namely a 10%, a 25%, and a 35% bracket. It's interesting, though, high-income taxpayers will be subject to a phase-out of the 10% bracket under Congressman Camp's proposal. Number 2, Chairman Camp proposes to eliminate the reduced rate we have now for capital gains. Instead, he proposes to allow individual taxpayers to claim an above-the-line deduction equal to 40% of their adjusted net capital gain. Number 3, Chairman Camp proposes to repeal the 2% floor on itemized deductions and the overall limitation on itemized deductions. Number 4, Chairman Camp wants to reduce the itemized deduction ceiling for home mortgage interest from debt of $1 million down to $500,000. Number 5, he proposes to repeal, and this is probably the most important provision in terms of tax simplification, individual alternative minimum tax. Number 6, which I think is going to get a lot of press, he's proposing to repeal Code Section 1031, thereby eliminating like-kind exchanges and the corresponding tax deferral. We have a whole industry dedicated to 1031 exchanges, both in terms of accommodation folks out there, as well as real estate folks serving that industry. We're likely to see a lot of debate. And number 7, Chairman Camp proposes to eliminate the deduction for the payor of alimony and eliminate the inclusion of income for the alimony recipient.
I see some interesting individual ones certainly in there, but looking at the other side of the coin, as you say, what stands out to you when we look at the tax provisions aimed at businesses and corporations? What's noteworthy there?
Well, probably the number one provision in terms of simplification also deals with the alternative minimum tax. Chairman Camp proposes to repeal the corporate AMT. He also proposes to repeal a significant number of corporate tax credits. In addition, he proposes to extend the amortization period for acquired goodwill, currently 15 years, to 20 years. Chairman Camp proposes to simplify the requirements which dictate whether a corporation uses the cash method or accrual method of accounting. This change would eliminate a lot of complexities that are contained in our current tax laws. The 5th change in the corporate arena is the proposal to eliminate the LIFO inventory method of accounting. In addition, Chairman Camp proposes to permanently reduce the built-in gains tax recognition period in subchapter S from 10 years to 5 years. In addition, he also proposes to allow non-resident aliens to be beneficiaries of what we call electing small business trusts. However, non-resident aliens will not be able to be shareholders of S corporations or qualified subchapter S trusts. These provisions are not all specifically focused on tax simplification, but the impetus behind this bill hopefully is going to get a lot of discussion on the Hill. We've already seen a response from the White House, and hopefully it's going to get lawmakers focused on revamping our tax system, focusing on simplification and equity.
Very interesting. That's something we definitely need, a bit of simplification, just so more people can understand what's going on with American tax law. Once again, that was Larry Brant of Garvey Schubert Barer. For more of his insight on this and all issues related to tax law, be sure to visit larrystaxlaw.com. Thank you for joining me today, Larry.
Thank you for having me, Colin.